Hey folks, Vic here with the weekly trade video for Friday, June the 12th of 2026. Um, Safe to say that the current trading environment has been anything but normal. Between ongoing geopolitical tensions, unexpected headlines, increased volatilities, etc., many traders are finding themselves caught on the wrong side of the market. The reality is that most trading accounts aren't destroyed by one bad trade. They're destroyed by poor risk management and the lack of a clear plan. So, in today's video, I'm going to show you several live swing trades that we're currently managing. You'll see one trade that's progressing nicely with risk now significantly reduced. Actually, I'll show you a couple of those. And you'll also see a trade that didn't cooperate and was closed for a super small loss. I'll show you how that works. These examples highlight one of the core principles behind our long-term success, and that is protecting capital first. Because in trading, it's not about being right all the time, because you won't be. It's about managing risk so that one trade never has the power to seriously damage your account. Alrighty, so let's take a look. Okay, so let's take a look at a few of these trades. This is the Australian-New Zealand dollar pair, and Darko does his usual top-down analysis. He shows our members in advance exactly what he's going to do, where his pending orders are. I'll just show you here quickly on the monthly chart. Every month he'll go over the look of all of the charts, and this candle got his attention, especially because if you zoom way out here, there was a level right here that got his attention. There's other levels here, right? You go, well, why did this level matter? Because that's where there was a reaction. These are all blue candles going up until this. That gets your attention, right? So then what we want to do is go to our weekly chart, have a look at that. And that's that same level. You see this price was in this nice trend, and all of a sudden this candle here, actually the wick went above everything and came all the way crashing down here. Pretty negative. So when you look down at the daily chart, it's they get the lower time frames look more dramatic. You can see it waving higher and higher. It's just a kind of a compressed move here. It wasn't really strong. It was kind of a more compressed move higher, and then a straight down move here. So this level here happened to coincide with a 62% retracement from this high to this low. That was this level in here I was showing on the daily chart. But that's where the sell was, and this actually ended up getting filled pretty much to the pip. You see all this in here? This is called patience. These are 4-hour candles, and be honest, if you're sitting here for all of this time, like that got filled on the 3rd of June. I'm recording this on the 9th of June. All of this time, like all the way till here, what's that, the 8th of June, yesterday, Monday, you sit here watching this, wondering what's going to happen. This is where having a plan, being patient, all of that kind of stuff comes into play, and then finally it drops away. When this happened, we have rules for how we reduce risk. We haven't made a profit target yet. That's down lower here. We'll look for these levels down here and below. But instead of our initial risk being above this high, it's come all the way down above here. Now we have a super small risk if it goes against us, and yet we're allowing ourselves a bigger profit if that happens. All right, let's have a look at the next one here. What else did we have? We had the Aussie Swiss is one that I look at right here. If I can get my mouse working, hang on. There we go. Yeah, this one here also was a short. I won't go through all the details of it here, getting short, but in any event, the sell on this one was right here, 62%. Pretty good level up in here. And as it came down, these lows are the first place we want to look to get some profit. And so that's already been done. We now have a free look at this. And again, our risk now has been moved way down from above here to down to here. So even if you get stopped out, it's going to be a reduced win. There are other ways to manage risk. You can trail it, and I won't get into that right now, but basically you can see what happened here. Though we got filled, we got our first profit, and now we're going to just patiently hang on and see what happens here. Here's one that didn't work out. On the Euro Kiwi, where are we? Right here. So, looked really negative. Look, this is the environment we're in. You get these huge move down, and a big move up, and now who knows what's going to happen. And on our entry, I'll just show you the entry here. This big move down, the 62% was right here. Look what this has done. Like, Now, just be honest. If you got filled here and it's going like this, would you panic and jump out and say, this is stupid, it doesn't work, and all that? Probably you would, or a lot of people would. But what Darko did is he said, look, we have a protocol we call limit to break even, and that means that if we want out of the trade, we try to get back out to near where our entry was. In this case, you can see this level up over here. You see this support and resistance. He told everybody 197.60, take the trade off. Guess where it went down to? Just below that. It went down to about 55. So that is now a super micro small loss, like it's negligible. And now we don't have to worry about anything about this. We're out of it. And again, we're getting back to the theme of this whole video here, is that you have to have a plan for managing when things don't go right. And in this environment right now, it's really crazy what's happening, jumping up and down. We're not predicting when it's going to end. We just take our trades as they set up and follow our trade management protocols, and we're going to be just fine. Our accounts have not been damaged hardly at all. There was a little, I believe there might have been a very, very small loss one of the months. The other ones have been slightly profitable. And I mean, I'm talking about since this Middle East conflict started. But overall, we're up. And, you know, that's the reason is just because of the trade management and the way that we handle everything. And Darko's been right on top of letting all the members know exactly where to move stops and that kind of thing, helping them with their trade management. All right. Anyway, that's where we're at this point, and hopefully these trades that we're still in will continue and work in our favor. So if today's review demonstrates anything, it's that successful trading isn't about finding perfect trades. You just saw that, you know, a few trades worked out, one that didn't work out. The difference is that our process was followed in both cases. Like when a trade moves in our favor, we reduce risk and we protect profits. When a trade fails, we exit according to a plan and we keep losses small. That's how consistency is built over time. That's how your account gets built. The traders who survive and thrive aren't the ones who predict every market move. Nobody can do that. They're the ones who manage risk better than everyone else, because at the end of the day, that's really what we are. We're risk managers. Alrighty, as I wrap this up, my question for you this week is, what do you believe is the biggest challenge traders face during highly volatile market conditions? Is it controlling risk, controlling emotions, or sticking to a single trading plan? Let me know in the comments below. Thanks so much for watching, everyone. I'll see you next week with another video. Take care.